Hope everyone's doing well and had a good day. This is the overview of the Emini 5-minute chart for Monday, December 2nd, 2024. First day of the month, so we'll take a look at the monthly chart. And we have a very big bull trend bar last month. My question is this a measuring gap or an exhaustion gap? And right now, we don't know. The bulls are hoping we have a measuring gap, maybe from this low to this breakout point, and we rally all the way up here. And then, of course, if they make it there, they'll extend the target more and more. The bears want the opposite, starting with a test of the bottom of this buy climax. So the bears hoping this is the beginning of exhaustion. And exhaustion does not necessarily mean trend reversal. It just means a pause in the trend. So clearly we have a bull channel, 2 big legs up, maybe 2 or 3 legs up in here, and then a pretty big bull bar closing on its high, but very far from the moving average. Bad buy signal bar before. This breakout point is a magnet. So we have several magnets below. It's possibly a late leg. So you just don't know whether this is going to be exhaustion or a measuring gap. But for me, I'm hesitant to buy up here. I think I'm more thinking this is exhaustion. We'll at least come back and test this breakout point and see what we have here. But so far, it's a good bar for the bulls, and it's with the direction of the trend. Weekly chart, it's Monday. And we can see more details in here. Buy climax, deep pullback, buy climax, deep pullback, buy climax, deep pullback. So we have 3 or 4 pushes up here. Big bull bar, but deep pullback, and then the bull bars here getting smaller and smaller. Of course, this is only one day so far, but bull bar here, even smaller bar here. So momentum for the bulls slowing down, and that's a problem because we're far above the moving average. The bulls are only going to pay far above average price if there's momentum, if there's above average bullishness. If we start to go sideways, getting a deep pullback here, 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 we start finding sellers at new highs, bulls taking profits in the channel phase, and bears initiating shorts. We could easily test back to support, maybe here, here, or the bottom of this buy climax. And then for the daily chart, going into the day, we can see the market's creating higher highs and higher lows. So we have a bull channel. We know bull channels evolve into trading ranges. We know they typically pull back for 10 bars and 2 legs after 3 legs. We have 3 pushes up here. Again, lots of sideways trading here, deep pullback here, weak rally through here. So the bull's hoping we have a double bottom, break out of the neckline, and then we rally for a measured move up. The bears hoping for the opposite. Failed breakout, we get a double top, test down to the bottom of the trading range, but ultimately break below the neckline, fall for a measured move, test the bottom of the buy climax. To me, it looks like an overall bull channel with lots of trading range price action. So it looks like the channel is getting weaker. The bulls are becoming more efficient, taking profits at highs, buying pullbacks rather than buying as the market is rallying. They're reducing their risk, taking profits, reducing position sizes as the market rallies. And then here's the 5-minute chart for today. Going into the day, if we do not have the Globex chart, if we only have the regular trading hours, we can see a tight bull channel and looks like a minor reversal through here, maybe just a trading range. Is this a major higher low? It might be, but it's more clear to me that bar 26 on Friday was a major higher low. So until we get below here, the market is still trending with higher lows and higher highs. Bar 1's a big bull bar, but it has big tails. It's more of a trading range bar, even though it has a big bull body. You look at the context, lots of overlap, and of course the tails on the bar. It's not certain that we're racing up, and because of that, on some smaller time frame, the market rallied and then pulled back into the close of bar 2, and that's a trend line break. We had a bull trend on this bar, a trend line break. The expectation is a retest, and we'll see if there's sellers or buyers up here. In this case, traders sold the close of 2. We rallied, pulled back, and then we continued to sell off. So right away, we have information on the open. The first 2 bars of the day, big up, big down, big confusion. Bar 2 is an inside bar. Inside bars are trading ranges on smaller time frames. Even though it's a trend bar, we have a lower high, we have a higher low. The market is contracting, getting squeezed. Probably going to get a second leg down, but the bulls also might need a second leg up. So again, big up, big down, big confusion. Both sides expected to get second legs, but because it's a trading range, second legs are delayed, and they come after deep pullbacks. So traders buy low, sell high, and scalp. Bear trend bar 2 and follow through 3, but weak follow through. Bar 3 is a trading range bar, even though it has a bear body, and sure, it's strong enough for a second leg down. But that doesn't mean traders are desperately selling down here. This looks like a tight trading range, and tight trading ranges are limit order markets. What that means is they're bad for stop orders. So traders betting on stop orders succeeding, entering on stop orders, they're going to lose most of the time. So as far as above bar 3, probably more sellers. And even below 3, we have the gap up. The prior day is bar 45, gap up in bar 1. That rally will probably get a second leg up. But now we sold off enough on 1, 2, and 3 that will probably get a second leg down. Bar 4, trigger the buy above 3, but it's still a weak buy, bad signal bar, and bad context. Top of a tight trading range, probably limited upside here. And then bar 5, bear bar, probably, well, let me back up. Bear bar on 5, it's an outside bar. So we have a higher high, we have a lower low. Expanding triangle, smaller time frame. All that means is the market's probing up and down, and the range is expanding. Probably buyers below and sellers above. Leg 1 down, pull back, maybe a second leg down before we find buyers. That's what happened on 6. 6 can also be seen as 3 pushes down. 1, 3, and 6. You can see the 3 pushes there, so 3 legs down. The reason we count legs in trading ranges is because, well, first of all, we count legs to count minor breakouts. We only do this in trading ranges. In trends, you don't count legs necessarily. It depends on, I can't speak for every trader, but for me, if I'm leg counting anytime, I'm counting minor legs. If the market's sideways, we're in a trading range, I'm counting legs. If we're in a trend, I'm counting the reversal attempts. Those are the legs. They're minor reversals. So bar 12 here, maybe a high 2 or a high 3, but it's implied. It's a minor reversal. A trading range is a pullback of a trend. Same idea here. So why do we count legs? Because trading ranges reverse after 2 or 3-legged moves. So why do we count legs? We're basically looking at channels on smaller time frames, on this time frame. So what I mean by that, there's a bear channel on a smaller time frame. Bar 6 is attempting to break out below a bear channel line. And we know that's a low probability bet, betting on a bear breakout of a bear channel. Because 75% of the time, you get bull breakouts of bear channels. And that's why, if you ever listen to Al Brooks, he says, to me, a bear channel is a bull flag. Of course, the opposite, the inverse is true. A bull channel is a bear flag. And it's important to know that because that's exactly what we have here. This is a bear channel. The problem right now for the bears is that we have a higher low. So yes, we have lower lows here, lower highs, but in the big picture, we have a higher high, we still have a higher low. This might be a broad bull channel. 7, we rallied. It's weak, but we rallied from the low of 6 to the high of 7. And that rally from this low to this high is enough price movement that I suspect we'll find buyers below in a second leg up. So 7, thinking through stop orders again. It's a limit order market. Traders betting on breakouts will probably lose most of the time. And if you're selling below 7, betting on a successful bear breakout, you want a bear breakout, basically a fourth leg down in a tight trading range. So probably more buyers below. We're going sideways. We're finding buyers on 9, outside up. Even if it doesn't go below bar 8, you can basically view it as an outside bar if the low is the same price and the high is above the high of the prior bar. What's an outside bar? It's just like bar 4 or bar 5. It's an expanding triangle on a smaller time frame. The market's probing up and down, trying to find the fair price. We tried to break out below 8. We failed. We're trying to break out above 8. And at this point, we have a breakout attempt and a pullback. The bull's hoping it's a breakout pullback. Buy. The bear's hoping it's a failed breakout. We reverse back down. But obviously, you can see how tight the range is. It's not ideal for trading. So another stop order with sellers above. Traders buy above 9, hoping for 3 legs down, bull breakout, and they get bar 10, and that's disappointing. This entire sell-off might need a second leg down. If we looked at a higher time frame, the 15-minute chart, we simply have 2 bars down to bar 6, a pullback, and then possibly a second leg down. 11, 12 consecutive bull bars, good for the bulls, but still bad context. We're still not above this high, and we're still not at a new high of the day. So any bull breakout in here is still within a tight trading range. So bar 13. Seems like a good bull bar, but it's problematic. For one, there's a tail on bar 13, which means we rallied on 12, we pulled back on 13, and traders bought a pullback on 13, and then we rallied into the close. So yes, 3-bar bull micro channel, but context is the most important thing. And I don't want to get sidetracked here, but I think it's worth talking about this. Breakouts are at the heart of everything that traders do. It's really important to understand breakouts. And breakouts go really deep. There's an incredible amount of information on a 5-minute chart. And so you always have to be asking yourself, breakout of what? Because imagine if you go on the Brooks Trading Course website and you see Brad writing in the blog, and he writes in the blog, the Emini had a bull breakout. Your first question is, breakout of what? What's the context? What do you mean? What are you talking about? You can't just say, there's a breakout. It's breakout of what? And so you have to know what the market is breaking out of, and then you also have to assess the strength of the breakout. And you can do that judging the bars and judging the overall context. So what's 13 breaking out of? I said we were getting lower highs. We have a bear channel, or it's a triangle because higher lows as well. But we're breaking out of a bear trend line. So we're breaking above a bear channel. So you can call this a bull flag. We have a bull trend or bull breakout here, a bull flag, minor reversal, trading range, and now we're getting possibly trend resumption to the upside. What else are we breaking out of? We're breaking out of the prior bar's high. Bar 12, closed above it, broke out above this, broke out above the past 10 or 12 bars. But we're still not above bar 1, and that's a problem. We're still not at a higher high. So any rally in here has the potential of being within a trading range or a bear trend and reversing, failing. The bulls really need to get above this major high. And here, one more thing. The bear's hoping we get a double top with bar 5. The bulls are breaking above it. Bulls looking for maybe a measured move up of this. But then we got bar 14. And 14 is a problem for the bulls. If you're a bull and you bought the close of 13, you're hoping for momentum because you're buying at the top of a trading range. You're buying what might be a late leg, 6 and 7, leg 1. Sorry about that. The low of 6, the high of 7, pull back. And look at that. It's a perfect leg 2 measured move. Leg 1, pull back, leg 2. And leg 2 subdivided into 2 legs of its own. Bar 9, pull back, and then 11 through 13. And even in here, 11, 12, pulled back on 13, rallied on 13. So there's too much overlap here for the bulls to, let me put it this way. The bulls have to be quick to exit if they're buying here. The context is bad. There's a lot of overlap on the bars. And if you're betting on a breakout, then you need the breakout to continue. If we start to go sideways and stall, this is not breaking out. This might be the top of a trading range. It might be 2 legs up in a trading range, which often reverse. So at this point, we're still below this high. And the bears are now looking at this saying this might be a lower high, double top. Let's see if we can test down to the bar 6 low and maybe even get a measured move down. The range of the day is small so far, and we often get measured moves of the opening range. 16, high 1. It's a high 1, but what's the context? Do you look at the past 20 bars and say this is a strong bull trend, or do you look at the past 20 bars and say, I don't know, deep pullback, a rally, but hardly breaking out of here, another deep pullback. This might be a trading range. Lower high, higher lows, it's a triangle. So this high 1 is in bad context. It's a trading range. We're at the top of the trading range. It is usually better to do the opposite of the buy signal if you're in a trading range. If you're in a bull trend, early stages of a breakout, that's when you want to buy a high 1. But here, you might be buying a late leg at the top of a trading range. And we basically went outside down 17. Bar 17, bear, surprise. But it makes sense, top of a trading range. Bulls giving up. If you're buying here, we went sideways for 3 bars. And that's disappointing. So 17, bears attempting to cross below the moving average. But the problem is now we're at the bottom of the trading range. Traders would probably prefer to sell a pullback, maybe the breakout point, bar 16. 18, 19, we have a 3-bar bear micro channel. Look at the tails on 17, 18, 19. Same problem as 13. I was talking about that tail. 17, sold off, rallied into the close. That's a prominent tail. 18, sold off, rallied into the close. Another prominent tail. 19, inside bar. This is already 2 or 3 legs down. And then an inside bar, possible final flag for this minor bear trend. And it's possibly leg 1, pullback, leg 2. Remember I said breakouts get deep pullbacks and delayed second legs. So maybe this is leg 1. Maybe this is leg 2. And we're in an area of support. Leg 2 measured move, bottom of a trading range with consecutive sell climaxes. Second leg traps. Second legs often look stronger than the first leg. So here's the first leg. Deep pullback. And there's a stronger looking second leg, but there's warnings throughout it that it's not as strong as it appears. 20, big bull bar, probably going to get a second leg up. It's from the bottom of a trading range, and it's closing on its high, crossing the moving average. Sort of a climactic reversal, but traders are buying deep pullbacks. 19 was a bad buy signal, and traders were trapped here, selling above 19, selling above 18. Probably come back and test these prices because the market's in a trading range and we often get deep pullbacks and delayed second legs. 21, no momentum, no follow through for the bulls. So the bulls buying here. If you bought the close of 20 and now you're stalling in the middle of a tight trading range, you may look to exit your long and buy lower. 22, bulls trying to continue, but the problem is we're getting closer to the top of the range. We're testing prices where traders got trapped. There's layers of resistance above. Bear bar 24 or 23, but looks like a minor reversal. Leg 1, minor reversal, maybe leg 2. To me, this looks like a minor reversal, and 20, 21, 22 will probably get a second leg up. Might be a 50% pullback of the rally. Let's see. So maybe from here, there's 50%. 24, high 1. Maybe it's a high 2, high 1, 21, high 2, 23. But high 2 at the top of a trading range. In reality, this will still probably get a second leg up, but we may have to get a deeper pullback first. And instead, we rallied to a new high. 27, breaking out of the top of the range, but it's a trading range. What are we breaking out of? Well, the bulls are hoping we break out of the trading range. We have a double bottom, bull flag. We have a bull trend, trading range, trend resumption. So the bulls want a measured move like this up here. Look at bar 27. It's not closing at a new high. It's closing below its midpoint, and it's a buy climax, pause, buy climax, pause. Might be a late leg 1, leg 2, maybe leg 1, leg 2. There's problems with this breakout. The bulls really need follow through. 28, finally breaking out, but then no follow through. 29. So that's a weak breakout attempt by the bulls. The channel up is tight, but overall it looks like a trading range. And if it is a trading range, we can get a deep pullback. And if you think through the market cycle, breakout, pullback, channel, channels evolve into trading ranges. So I think the target for the bears is probably somewhere around the bar 23 low. $30, high 1, but top of a trading range after 29, which will probably get a second leg down. And then we start to go sideways. The bears got their second leg. It's more sideways than down. We did not get below 30. But look at the market, tight trading range. Now the one thing for the bulls here, we are holding above the moving average. It's slightly more bullish. But if this is a bull trend, and you're saying we have higher highs, higher lows, you have to ask yourself, is this really a strong trend or is it a weak channel? And if it's a weak channel, it can evolve into a trading range and get very deep pullbacks. We have a bad signal bar down here. The market could test this market cycle, bottom of a channel, possibly the bottom of a trading range, 23 low. So if the bulls are not getting momentum, they may be quick to exit. The market's getting squeezed. It's breakout mode. Repeated breakout attempts by the bears to the downside. They're failing. And at a certain point, they're going to give up trying to sell, and then we may get a rally. This rally from 18 to 32 will probably get a second leg. And now we've had a couple of legs sideways to down. I'm going to speed it up just a little bit. So the tight trading range here continued for a long time. We're going sideways on a flat moving average, breakout direction, close to 50-50. Finally, we get a bear breakout, 57, maybe 30 is the bottom of the trading range. So 57, close below all of these lows. That's good for the bears, but then no follow through, 58. Bull body on the bar, it tested the breakout point. So bulls who bought this red line, the bottom of the trading range, those who were trapped on 57 had a chance to avoid a loss on 58. 57 should still probably get a second leg down. But I think the risk for the bears is that maybe it's leg 1, prolonged pullback, second leg trap, and then over here, testing support. Micro double bottom, bull bar closing on its high. The risk for the bears is that we rally up to the middle of this tight trading range. And that's what we did. We rallied to this trading range. The midpoint of this trading range, we started to find sellers. We're finding sellers into the close of bars. But the rally is strong enough. It's a 5 or 6 bar bull micro channel. The odds are there's buyers below. The first reversal will be minor, and we'll get a second leg up. If we fall below 63, that's a pullback, but a second leg up is likely. In this case, 66, maybe a little climactic, one of the strongest bull bars in this rally, testing the top of the range. And then it had bad follow through, 67. So we did not break out to a new high. Now we have a high 1 at the top of the trading range. Bad signal bar, context, really not great. Lots of bars sideways. But what's going for the bulls is this breakout will probably get a second leg up. And we have been creating higher highs and higher lows. So this is a bull channel. We're rallying to a new high. The rally is weak. 69, big tail, 70, big tail. Inside bar, 71, possible final flag. Inside bars are trading range bars. And now we're late in this rally. 10 bars into the rally at the top of a trading range. 72, bull breakout, but could not close above 70. And no follow through, 73. Consecutive bear bars, probably sellers above. Disappointing for the bulls, high 1, and then a give up bar, 75. Now, 75 might be a 50% pullback of the entire rally. So you will have some support here, but the approach to 50% is stronger than the bulls would have liked to see. 3 bar micro channel with acceleration on 75. That's enough for a second leg down. Probably trap traders above looking to exit around the breakout point and a second leg down likely. And that's what we got here. It's very brief, but we broke out, pulled back, tested the breakout point, and sold off down to 78, and then found a double bottom at support. Let's see. Maybe here we had a gap between the 60 high and the 62 low created by bar 61. And this became support. Stop order trades today. Tight trading range. Ever since bars 1 and 2, it's big up, big down in bad context for stop orders if you look at Friday. So through here, maybe you can buy above 9 or bar 11. Better yet, it's a micro double bottom, bull bar closing on its high. But at some point, you're disappointed with the follow through. And at the top of the trading range, bulls will likely scalp out. Not a great limit, or not a great stop order, sell below 16, but it is a second reversal. Rallied, pulled back below 15, tried to rally again at the top of a trading range. There is a stop order sell below 16, even though the stop order signal bar isn't very strong for the bears. High 1, but top of a trading range. Really not great to buy here. But if you do, where do you have to get out? Now we got a 5 or 6 bar micro channel. Probably don't have to get out below 29. This is a tight enough rally that the first reversal should be minor. But up here, it's a second reversal attempt, tight trading range, possibly a final flag. So traders will be quicker to exit up here. Really not great for stop orders today as a whole, but especially through here, very tight trading range, limit order market. Traders could bet 59. This is a climactic reversal. 57, not getting the follow through it needs. It's a big bar, but where are the consecutive big bear bars? It's really a bear bar and then a doji, bear bar, doji in a trading range environment. So traders could buy above 59, taking a chance. We rally to the top of the bear leg, either the top of the sell climax 57 or above 54, maybe to a new high. Tight enough rally. It's a strong enough leg that the bulls will probably get a second leg up, and the first reversal should be minor, so you could buy above 65. It's a high 1. You're taking a chance because you're at resistance, but the momentum is good. And then for limit orders, basically today was filled with limit orders where a limit order, you're betting the breakout will fail. So today's a day where you could basically buy below any bar, scale in lower, and make money. Sell above any bar, scale in higher, make money. And I'm not going to go through every trade, but that's what today was all day. Limit order market through here, all through here, and through here. So really, for limit orders, I still like to think through stop orders. I like to think through the stop order perspective. I like to think about where traders were trapped, and that helps me with understanding limit orders. So when you see a stop order trade that is successful, like let's look down here, bar 20. There's a gap between the 19 high and the 21 low. The midpoint of that gap is going to be support. We didn't test it on 23, but we came close. We found buyers. But what I'm focused on is the stop order above 19. That was surprising. 3-bar micro channel, and we got bar 20. Traders selling above here were trapped, and they're going to look to sell. They're going to look to buy on the first pullback for a second leg up. Let me reword that so I'm clear. Bar 20 is strong enough that it trapped traders below the breakout point, the prior bar's low, the prior bar's high, 19, and 20 is a strong enough bar from the bottom of a trading range. It'll probably get a second leg up. But traders want to buy a pullback because it is a trading range. And what do we get? We have a bull breakout 20, a pause on 21, starting the pullback. And we pull back deeper below 21, and we find buyers below because bears who sold here got trapped on 20, and they're looking to avoid a loss or minimize their loss. Bulls who did not buy above 19 missed the buy 20, so they might be feeling FOMO. The market raced up without them, and they want to buy a pullback for a second leg up. Bulls and bears looking to buy after 20. More limit orders, you can think through high ones and high twos, low ones, low twos in trading ranges. So high ones at the top, low ones at the bottom. Bar 10 is a good example. Maybe it's a low two, but bottom of a tight trading range. And then 34, it's a high one, maybe a high two, because this is a minor micro double bottom, but it's a bad signal bar. 2 or 3 legs up, and lots of trading range price action today. Where do we go tomorrow? We have a bull bar and a follow-through bar. But we know if we crack open this bar and look at the 5-minute chart, even though it looks like a bull trend bar, opening near its low, closing near its high, we know it's a lot of trading range price action. So looks can be deceiving. We're rallying, but the bull bar that got follow-through is really a trading range bar. And trading ranges are confusing. They're areas of uncertainty, and probability is not all that clear. So if we start to go sideways this far above the moving average, bulls will start to reduce their positions because the risk is big, and the risk is that we fall all the way to the bottom of the bull leg. In theory, the stop goes down here. So if you're willing to buy here, 1 times your risk is all the way. If you're going for 1 times your risk, it's all the way up here. And you can only do that if you're 60% sure or more than 60% confident that we're going to rally up here before we fall down here. But based on the depth of this pullback, the strength of this rally, to me it's not 60% that we're going up here before down here. And if it's not 60%, you cannot hold on to the buy. So I think there's probably sellers above today's high. It's a trading range day, and it's consecutive climaxes, and these gaps between bars are climaxes or breakouts. And the point is the rally is weak, and breakouts are getting bad follow-through. And look to the left. What are we breaking out of? The bulls are trying to break out of this maybe double bottom neckline, go for a measured move, but they need to do more than they're doing now. The bulls need at least 1 more bar. All right, that's all the time I have for today. Thanks everybody for watching, and I hope everyone has a good night.